Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on Avalanche of commercial paper issuances, understanding the basics. On the back of Nigeria's high inflation environment, 22.04% as of March 2023, investors have sought investment opportunities with higher returns above the risk-free government treasury bills. Investors do this to bring their returns closer to the inflation rates to protect the value of their investments. As a result, we have seen significant interest in commercial papers in the past few months, which has led to an avalanche of commercial paper issuances. Hence, we thought to shed more light on the investment opportunity to enable you to understand how commercial papers work. The current total outstanding value of CP over 100 listed CPs in Nigeria as of 28th March 2023 is 715.3 billion naira, according to the FMDQ exchange. Commercial paper, also known as CP, is an unsecured short-term debt instrument issued by large corporations to raise funds to meet short-term financial obligations. CPs have several similar characteristics with treasury bills. However, one of the main differences is that treasury bills are issued by the government, while CPs are issued by companies or corporations. Characteristics of commercial paper. 1. CPs have a fixed interest rate and fixed tenor. 2. CPs are issued at a higher interest rate than treasury bills because they are riskier and it is not backed up by the full faith of the federal government. This presents an opportunity for investors to earn a higher return. 3. CPs are issued at a discount to its face value, implying that you can choose to collect your interest, return, or income on investment upfront at the point of investment and receive the investment value at maturity. This means that if you invest 1 million naira at the rate of 15% per annum, the 149,589.04 naira interest is paid to you now upfront. The discounted value of 850,410.96 naira is the difference between the maturity value and the interest amount while you receive 1 million naira at maturity. You can also decide to invest your interest, which yields a higher return at maturity. The 149,589.04 naira will earn interest, which increases your maturity value. 4. Interest on CPs is now subject to withholding tax of 10%. Hence, it is essential to note the net return after tax before investing. 5. CPs have a maximum maturity of 270 days. 6. CPs can be purchased both in primary and secondary markets. The primary market is when you buy directly from the company issuing the CP. The secondary market is when it is subsequently traded among holders of the CP. 7. CPs are less liquid than treasury bills, that is, it is not easy to sell in the secondary market before maturity. Hence, anyone buying CPs should plan to hold till maturity of the investment. 8. CPs mostly have a minimum investment threshold of 5 million naira. It is important to conduct a due diligence on the company issuing the CP before making any investment decisions. Some of the steps to take include: 1. Ensure you buy CPs of companies that have consistently been profitable and with business that you understand. 2. Ascertain the company's credit rating, an assessment of credit worthiness. For the conservative investor, we would recommend that you look out for a minimum rating of A+ by a well-known rating agency. 3. Ensure the CP program is registered with the FMDQ exchange. 4. Confirm that the value of the CPs issued are a tiny proportion of their total net assets or equity. 5. You can also consider receiving your funds upon maturity and reinvesting rather than automatically rolling over your investment to test the firm's credit worthiness, which is the ability to pay back. 6. You can also ascertain the governance structure of the issuer, which is the company. This is to ascertain that the company is well structured and run by reputable persons. CPs are the form of fixed income investments that preserve your capital and are not vulnerable to any price or rate fluctuations. Hence, are very low risk compared to the other forms of investments. There is a need to seek investments with higher returns to protect the purchasing power of your savings and investments. In this regard, CPs are a credible alternative to treasury bills. Thank you for listening. Please join us same time next week for another exciting and insightful session. For comments, questions, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.